Good morning, everyone, and welcome to the Trade Talk podcast. Today, we will start with global cues as they are turning more and more important for emerging as well as developed markets. Later on, we will talk about strategy on Nifty as well as Bank Nifty, and we'll discuss some support and resistance for important stocks. So, if we go through with the global markets, then treasuries extended declines as a slew of companies, including BHP and Phillips Morris, flooded the market with debt sales ahead of key economic data and Fed decisions. Underwriters forecast $120 billion of US debt will be issued this month, much of which is expected to be sold in the next few days. That will certainly increase more pressure on the debt market, and in that case we can see upward activity in the 10-year bond yield. Currently it is at 4.25 and it was around 4.15 yesterday. Even 2 years bond yield is also very close to the 5% level. Brent rose above $90 per barrel for the first time since November as Saudi Arabia and Russia extended their supply cuts to year end. If the crude prices keep going upward, then eventually it will increase pressure on the Fed to increase rates further. Not at its September meeting, but maybe in the near future. So all these factors are increasing pressure on our markets as well as on other emerging markets. Currently emerging markets are trading almost at an unchanged levels or in the red. Gift Nifty is also trading nearly 15-25 points higher as compared to its previous close, but FIs are consistently selling in the cash segment. On Tuesday, we saw good amount of activity from the lower levels. During the day, the market visited the levels of 19,500, but it recovered back to 19,600. Today, it is nearing to the levels of 19,600 or 650, where it has good amount of resistance. And in the past also, when the market was very close to these levels, we saw some profit taking. At the beginning of the month, the market was very close to 19,650 levels, and since then the market has never broken this level. So the important part is that now we are approaching this level, so we may see some profit taking around these levels. We should look for taking profit on some long positions, or we may even look for taking some contra bets in the market between 19,600 to 650 with a stop loss at 19,700. From the levels of 19,600, the market can fall to the support levels of 19,500 or maybe 400 in the worst case scenario, where the market is having support of 50 as well as 20 days simple moving average. As the supports are very far from the current levels, we need to be careful while adding long positions at higher levels. For the Bank Nifty, support exists at 44,400, and if the Bank Nifty is strong, it may not break the level of 44,400 levels, but if it breaks to the same, then we can expect further more weakness toward 44,200 or 44,100. For the Bank Nifty IT index, for the Nifty IT index, the support zone exists between 32,100 and 32,000. The strategy should be here to buy on dips. The overall performance of the Nifty IT index is better than other indices. If we go through with the sector specific activity, then in that we saw some buying interest in PSU banks, especially Bank of India, Bank of Baroda, and even Punjab National Bank. So these are the stocks on which we are going to focus in today's date. For the Bank of India, the next level to watch out for would be 100. For PNB, it is between 72 to 74, and for Bank of Baroda, we may see the levels of 202 or 205 if we see further more activity from the PSU bank space. Otherwise, from the IT index, we like TCS as well as HCL Technologies if they corrects from the current levels, but at these levels we need to be little bit careful if there is any higher opening. Broadly, we are of the view that we need to be more and more stock specific till the markets are in the range, and the strategy should be to buy on dips. That's all from my side. With this, I'm ending today's morning podcast. Thank you very much for listening me. Have a great day to all of you.